The S&P now has more dividend-paying companies than at any time over the past decade. However, not all dividend payers are created equal. For a look at those at the top of the class, Bloomberg's chief national correspondent Carol Massar joins me now with the list. I didn't realize that there was a top of the class here.
There is. It's called the Dividend Honor Roll, if you will.
There you go.
Hi, Mark. Hi, everybody. Well, working with Bloomberg rankings, we looked at Russell 1000 companies that outpaced the index on dividend yield. The companies also had to do better than the index on dividend yield growth and price appreciation over the last year. Only 17 companies made the list. Many on our list are financials. That included Wells Fargo at the top when it came to dividend yield. And then you've got Ohio's Fifth Third Bancorp at the bottom. These financials also grew their dividend yields big time, around 24% for Fifth Third and 59% for Wells Fargo in the past year alone, as some boosted payouts after passing U.S. stress tests earlier this year. Another group on our list, Tech and IT, CA, a standout here, both for its dividend yield and for posting a one-year growth in its dividend yield of 350%. That was the growth, dividend yield growth, more than any other company on our list. Earlier this year, it announced higher dividends and share buybacks and a move to return $2.5 billion to shareholders. At the top of the dividend list, you'll find Lockheed Martin with a yield of nearly 5%, which has grown by 26% over the past year. So, Mark, it's just something to kind of keep in mind. It's a difficult market environment out there, so people are definitely looking at dividends and dividend yield.
Lots of stocks pay out dividends. How do you pick through all these names?
Well, you got to watch earnings growth. I talked to Bob Shearer. He's the lead portfolio manager for the $20 billion BlackRock Equity Dividend Fund. So this is what he focuses on. You got to watch for earnings growth because that gives you the ability to keep that dividend up. Also, look for, this makes sense, solid balance sheets. You want to see companies that can fund their capital expenditures, but also have that free cash flow to continue on with the dividend.
But even then, no guarantees. And you looked at financials as well.
Yeah, we did, because a lot of them came up on our list. I asked Bob Shearer about that, and he said, you know, there is still risk on the balance sheets of lots of financials. You've got to keep that in mind. Case in point, look at JP Morgan this year. Earlier this year, they passed those U.S. stress tests, and then, lo and behold, we had that $2 billion loss that came out that certainly spooked investors.
But we here at Bloomberg, we're hearing stories of lots of companies. They're finally starting to find their sea legs, if you will, after the last couple of years in this economy. And some of them are saying now is the time. Let's start giving back to shareholders. Let's up that dividend.
As you know, corporate balance sheets are probably the healthiest they've been in a long
Very
time.
much so,
They've got a lot of cash on hand. So we are seeing an increase in some doing buybacks, increasing their dividends as well to give something back to shareholders in a tough market
And a lot of shareholders have been demanding this because sometimes the money doesn't go to. No, they're not.
They're not bashful about saying, I want my dividend.
Carol Massar joining us with the list. Carol, thanks so much.
You bet, Mark.